Now, what you see here is, this is what I call a mini grid, and it's useful for when you hit the run button. It just shows you that something's happened and it's actually picked out some of those ETFs. But in order to see them in more detail, you go into the trade simulation area, and once you're in here, you can actually see them in the larger grid. And the larger grid is useful because it allows you to highlight, and that's how we'll see which ones are rotating, is by just mousing over the symbols. We'll see all of the similar symbols highlighted in this grid.
So these ETFs can rotate very quickly. I see that. Looking at multiple days there, just in December, EWT was down near the bottom on the 16th, and by the end of the month, it was at the top.
Exactly. Yeah, they do change. They rotate. The relative strength changes quite a lot, and that's useful for a trader to know how quickly they're rotating, because you want to know what your average hold period is going to be, and if you're going to be having to swap in and out of stocks a lot. But what I find useful about this thing is just being able to quickly see how long the symbol or the ETF or the stock or whatever you have in this grid, how long it's been at the top, if it ever reached the top. And you see here, like IYR, you know, it's been a number 1 or number 2 or number 3 ranked stock for quite some time. This span that we're looking at is from early December through to the end of December, and IYR was pretty much at the top for the whole of that time period.
So if you're a relative strength trader, you would want to be in that particular ETF or another one that's hovering near the top.
Absolutely. And what you can get more information about this, if I just double click on this one here, we can actually go through to the chart, and we can see exactly what's happening to IYR at that time. And where it says Edge event, that's actually picking out the day that I clicked on in the grid and just showing me what that day was.
Okay. It's nice to see a visual of it. So it went up from there.
It did, and you can...
And even though it pulled back, it was still relatively stronger than the other ETFs.
Right, and that's exactly what that grid shows you, is that it was outperforming, on a relative basis, it was outperforming everything else that was in that snapshot.
I see you have the daily and weekly bongos on there. Those are indicators that are in HGSI, and that weekly bongo really seems to keep you on the right side of the market for the longer
That does seem to be a very good indicator, the weekly bongo. You know, it stops you from trading in and out all the time, gets you in, keeps you in for the big rallies. And when it turns red, you know, that's a good warning to get out. It's a bit slow in turning around, but it does, you know, keep you into those rallies for a long time. Right here, you'd have gotten back in. See where it turned from red to green, and you'd have been in for the whole rest of this rally here. So that's a very nice indicator. That's another test that we're going to run, not today, but we can do another one of these and actually see how the weekly bongo works out in a backtesting situation.
Okay, good. Well, that's nice that you can go directly to the chart and get a visual on what happened. Okay. So is there anything else on there you want to show me here, or you can put? I see you can up at the top. It looks like you can put multiple symbols.
Yeah.
in.
So if you were interested in not just, you know, the auto highlighting of the symbol that your mouse is over, you can choose one. So SPY is the S&P. That's a proxy for the S&P 500. So you might want to highlight that to be always visible with a particular color. This time it's yellow. And so now, if I turn off my auto highlight, I just have SPY highlighted, and I can go and scroll through this whole chart, and you can see it sort of hovers around the middle a lot, which makes a lot of sense.
Yeah, because it represents a broader list of stocks, and you want to be in ETFs which are outperforming the SPY if you're on the long side. So
yeah, well,
that makes sense.
a lot of mutual funds and fund managers get paid just by beating the S&P 500. So if they're always in the stocks that are beating the S&P 500, then they're gonna get paid their bonuses. And And pretty much that's all they really want to do is beat the S&P 500. But as traders, we're interested in getting way better than that. So this is a useful thing for us to make sure we're in the best performers.
Well, there's a couple of ways you could use this, and you could look for strong relative strength, and then you could also look for weak relative strength that should be increasing, or hopefully would be going up. But primarily, I believe you want to stick to the higher relative strength ETFs. Okay, well, let's move ahead and do some actual testing here.
Sounds good. Let's go back to the entry design area. And this is where we selected those things that appeared in that grid. And now instead of selecting all of these ETFs, we'll select just the top 4. And if I run this thing again very quickly, it limits it to the top 4. And this now represents an interesting set of ETFs for us, because it's on a daily basis we're getting the top 4, and you really would like to apply some trading rules to that to see what would have happened if you were in those stocks. And you can play around with trading rules as well to do different things. But I've now selected them for my entry signals, and if I go to the simulation tab, I now have a whole bunch of other things I can do to apply trading rules to trading these. Okay, so you're looking at entry signals now? Yes, I'm just looking at entry signals. We haven't put in any exit signals right now. We can do that, and we will do that in a bit. But the first thing is I'm just going to show you some of the things you can do with entries on their own. You look on the right-hand side. You've got this set of properties, and this is really where you can play around with your trading rules. And the trading rules are there's quite a lot that you can put in, and you also have now, and this is a big difference from version 3.5, is you now have portfolios rules, so that you can, for instance, limit the maximum number of positions that you're going to hold in your portfolio during the backtest. And you can also do things like allow duplicates, so you can say that if a trade becomes available, you only want to take it if it doesn't already exist in your set of open trades. Okay, that makes sense. So the first thing I would do here is just say, is actually make no changes and just run this thing and see what kind of results we're getting. And so again, I ran the simulation. It's used the entry grid to give me my entry signals, and it's getting out after a fixed hold period. You can see down here the trade exit is set to be 1 day, 1 bar. So you buy it when the day after it signals, and then you sell it a day later. And you can see even holding for 1 day, the profit was $1,447 by holding every one of those for 1 day. And you see the number of trades that were made during that time was 828. It says the average hold is 2 days, and this is because the simulator will actually tell you how many days or partial days that you've been in the trade. And because the system has been configured on the right-hand side here to get in the day after the signal occurred and to get out the day after the 1 day period has expired, you actually end up getting in at the open on 1 day, and you end up getting out on the open of the following day. So the system is saying now that's actually 2 days, because there's 2 partial days that you're involved in that trade. Okay. So what happens if you change that to 2 days or 3 days as far as a fixed holding period? Well, let's try it. We'll change to 2 and hit the run again, and our profit's gone up somewhat. We'll go up to 5 even. Now we can see some big changes. Wow. So what market period are we doing here? Is this this was actually this is our equity grid, and I can superimpose on here the actual market. So let me do that, and we can see how the market was performing. So I'll say okay, so this is from the market bottom in March. Yeah. If I superimpose on the index, which is the index of all of these, dollar-weighted index, equal dollar-weighted index of all of these, then you can see that the index, it pretty much followed the index. Now, this isn't saying that it's exactly